So you find a major support for resistance level and market, and you know that big move will happen, but you aren't sure if the market will reject the level or will break through. In this video, I will reveal one of the most powerful signals, price actions base, which will help you to anticipate the future directions of the market. And if you want to show your support, please leave a like to help us with YouTube algorithms, and turn on the bell so you don't miss the new videos and released. This training strategy involves a combination of the two candlesticks patterns, the pin bar and the inside bar. You know both patterns most likely, but have you tried them together? Most notice traders makes their mistakes when they thread the signal candlesticks patterns as trading signals. It is essential to understand that candlesticks patterns have a little value if we don't see them in the right price actions context. Patterns alone usually don't have enough power to reverse the trend of the market. That's why combining candlesticks patterns around certain levels is a good practice and one of the key of successful trading strategy. The first component of the systems, the pin bar. The pin bar is the signal candlesticks that has a long tail and small body. To qualify as the pin bar, the one end close must be situated at the end of the bar's range, and the tail of the bar must make up at least 2/3 of the bar's range. The general rules of the thumb is the larger the tail, the weaker the more powerful the pin bar signals. The pin bar will help you to identify potential reversal in the market. When pin bars from it is good sign the market is ready to move in the opposite directions. Now, considering the rejection pricing of pin bars, we can use them to capture potential troops and bottoms to price movements. Identify breakout traps that can lead to powerful price reversal moves. Positions ourselves into the trending moves at good prices. You can see why pin bars are very powerful candlestick signals, and coupled with the right money management plan, you can capture decent profits on the consistent basis. The second component of the strategy is the inside bar. The inside bar is a two candle formation with the second candle's entire range located inside the previous candle's range. The high and low of the second candle must completely fit within the range of the previous candle. This is valid inside bar. If the high or low risk out from one of the ends and fits candles is not considered an inside bar. The inside bar formation is not technically a direction signal, it's what we call consolidation phase. This is because during the entire period the candle was open, the market did not make any real ground in the terms of movement. However, they can also form a market up turning points and act reversal signals from the key support resistance levels. Inside bars can be traded in the trending markets in the direction of the trend. When traded this way, they are typically referred to as instead bar breakout pattern. Inside bars can also be traded counter trend, typically from the key chart levels when traded. This way, they are often referred to as inside bar reversals on their own. Inside bars often may false signals, but in combinations with the pin bar, you discover a powerful trading setups which is also low risk and has the high reward potential. So these two formations are the basis for our trading strategy. A pin bar is a price actions pattern that shows the rejection of the price and indicates the potential reversal is imminent. and the inside bar is the price actions patterns showing consolidations and that potential breakout is limited. These two signals, when combined, result in the pin bar inside bar company that offers quite entry points in different strategies of the market. The pin bar plus inside bar combo considers of the pin bar that contains a small inside bar. So how to trade with the pin bar plus inside bar combo when looking for a pin bar inside bar combo patterns? The first step is to identify the pin bar. You see a pin bar immediately followed by the inside bar that's contained within the high-low range of the bar. Then you have a pin bar plus inside bar combo pattern. This combo is very powerful and is ideal setup for the trade on the higher time frames, either from the pullbacks to key levels or as breakout plays in a trending market. In this example, we can see the pin bar inside the bar combo that formed after the pullback to a support level in the upward trending market. These types of combo patterns are very effective because they give you the chance to get a better entry on the pin bar and allows you to get to the narrow stop loss and trade belows the pin bar or the below the key support level. When you see the pin bar followed by the inside bar or even multiple inside bars, it's time to take notice because you might have the potential trade entry on your hands. You simply draw a rectangle containing the pin bar and inside bar, and you trade the breakout of the area, ideally in the direction of the main trend. Here's another example of the pin bar and inside bar combo. This time I'm more a reversal pattern because it formed a resistance level cause a false breakout of the resistance levels and set of move to the downside. This combo pattern against allowed us to get a small stop loss entering and the breakout of the pin bar with the stop loss placed just above the pin bar. We can see the dramatic sell-off unfold as the price broke down below the pattern. Now this combination forms quite often across all the time frames, but that doesn't mean that all pin bars followed by the inside bar are ideal trading signals. If you trade every signal setup, you would most likely end up losing money, so it is very important to narrow down the signals that have the higher probability of the working out in your favor. Very important, the pin bar and inside bar combo gives a strong signal if it is formed on the higher time frames and if it appears near the support or resistance level, static or dynamic. So let's take the several sanctions. At the first one is near a support resistance breakout combining the pin bar inside bar combo with the breakout of support or resistance. You exponentially improve your chances for the successful trade. These odds are in your favor simply because you found a point of the confluence in the market. If you backtest the pin bars and inside bars after breakouts, you will notice they constantly produce a consistent response from the market. A bullish pin bar followed by the inside candles, which forms an important support level, is signaling that the higher prices are likely to develop near them. Here's an example. The chart has within a bullish price move which ends with the breakout below this upper trend line. After the breakout, a support area turned into the potential resistance. We found the bearish pin bar with a longer wick which forms the bearish momentum. So we first had to trend line breakout, first bearish sign, and then the confirmations of the bearish momentum with the pin bar The next candle which comes after the pin bar is the inside bar. This creates out the combo, and based on being a very bearish combo, you sell below the pin bar. You place your stop loss right above the longer wick of the pattern, above the previous swing high, or even above the broken trending. Take profits is minimum 2 times the amount risk. Here's another trade. The first things you want to do is to identify the support and resistance levels on the chart. Remember that the pin bar inside bar setups is the valid if it has confluence. That's why always look for the additional levels on the chart once you're stopped at potential setups. This example starts with the bearish trend and the breakout of the downtrend line. A price actions creates bullish pin bars, a valid trade bullish pin bars because it's located in the end of the bearish trend and has the visible large lower candle wick. The next candle was the inside bar, so this reverse a nice opportunity for the long position. Entry above the breakout of the pin bars inside bar area with a stop loss below the wick of the pin bar or below a previous slight low. The pin bar inside bar combo works well with moving average as a dynamic support and resistance levels in the trending markets. We like to call it dynamic because it's not like your traditional horizontal support and resistance lines. They are constantly changing depending on the recent price actions. There are many trades out these to look the most common moving average as the key areas and will buy when the price dips and touch the moving average, or sell if it's the price rises and touches the moving average. In this example we can see that it looks like the trade a pin bar inside bar pattern in line with the trend markets. In this case it was a uptrending market with the price above the 200 EMA. When the price corrects and reaches the EMA area, it formed a slight low, and after the next candles we found the pin bar followed by the inside bar. A good opportunity for the long entry. Also the market formed a double bottom around the 200 EMA, another confluence factor. We entered the long after the price broke the high of the pin bar. Stop losses below the low of the pin bar or below the 200 EMA, and minimum 2-to-1 reward to risk ratio. This chart shows another example of the good inside pin bar combinations. This time the trend was down or bearish, being traded below the 50 exponential moving average. The pin bar inside pin bar combo functioned. The continuation pattern is the trending market. A continuation pattern trade that implies the trend will continue moving in the existence directions. Observe the major sell off that took place once price broke down below the low of the pin bar. Again, stop loss above the pin bar and 2-to-1 reward to risk ratio. If you want to go to the one step further and you have with the FBI levels, the pin bar inside bar combo is again very effective to find spins entries and the end of the corrections. Here's Tesla. On the 4-hour time frame with the Fibonacci retracement place on its downside, and look where the pin bar inside bar formed right at this FIB level. In this case we are trading reversal signals from the key level of resistance to the 61.8 FIB level. This was the perfect signals with the long weak rejections level, something you want to see at the major level. The fact we had the other rejections of the level in the past was also a good thing. This tells me that there is selling pressure at the particular FIB level, and the buyers are unable to push price high. The entry below the low of the pin bar. When trading FIBs is advising to take profits as the price reach the next retracement levels. In this case, at the 38.2 level of you must close at the least 50% of your position, because most likely there are multiple orders around this area. In this example, we can see the 50% retracements in the Dow Jones, the 50% retracements and the pin bar. Inside the buyer's signals both came together at one common point and showed us a nice setup there. And what you should take away from this example is that it was also underlined with the general directions of the market. Notice that prior to the pullback we saw the nice really up, and the pullback didn't exceed the 50% area razor. It rejected in the strongly and has then bounced aggressively higher to the new recent highs. I hope it's clear that when you look for the pin bars inside bar signals, if it matches up the support factors, meaning the confluences. These signals tend to make better trades. The obvious price actions set up a major FIB levels can level up the huge moves, especially on the higher time frames. Learning how to identify and trade them can give you a very powerful trading system. As always, if you got any value from this and learned something new, drop us a like to help with the YouTube algorithms, and make sure you stick the bell icon to stay in touch with new videos I release. Until next time.